Good morning. This is Chris Robinson, Robinson Ag Marketing with today's. It's a little bit late because honestly, people on Friday, yesterday on Halloween, I just needed a break. It was a hell of a week, and we had trick or treaters and all that stuff. So here I am. I'm doing it in the morning. Hopefully, it'll help you. It'll give you a big picture look of the main things that I'm looking at that happened this week. Um, Today is Saturday, the 1st of November. So welcome to November. It's about 9 o'clock in the morning here as I start doing this. I'm going to do a little bit different. I'm going to talk about the S&P 500. Do you know that the low in April at 49.32, and then we had an all-time high this week of 69.53. I know nobody buys the low and sells the high, but somebody did. Somebody sold the low and somebody bought the high. I can tell you because I've been there, I've done that. If you do that math, kids, it's a 40% move. That's right, 40%. 2,021 points from the April low when people were cheering for whatever reasons politically that it was going to be the Trump crash and blah blah blah. I just find it ironic, and it's another reason that I don't pay any attention usually to half the stuff that you see on TV. Okay. I'd like to go back and ask all those people who got short in the hole as they were cheering the correction. And it wasn't, pretty good correction, about 20%, 19%. It just goes to show you that when you're falling all over yourself, pounding on your chest because you think you're right, you can have your face ripped off. And a lot of people they're cutting their noses off to spite their face for their politics. So don't do that. Uh, Left wing, right wing, whoever the president is, if you're making decisions based on how you feel about a president, you're going to lose a lot of money. And quite honestly, you probably deserve to because at the end of the day, we're all in this together. The United States is the best place to live on the planet. And the reason that we trade stocks and buy stocks is you want to own a piece of America. And then there's a reason everybody's trying to pour into this country, right? It's the best place to be with all of its problems, with all the people complaining about it. It is the best place to be. All right. So that's just something I want to talk about. That's pretty amazing. A 40 cent from top to bottom, from the April low to this all time high. And just remember that because we're going to have a 20% correction. We might even have a 30% correction or something like that. That'll get all the news because in our society and in this world, negative is what gets the attention. There's that old expression, if it bleeds, it leads. So if you're worried about a correction, if you're worried about this, worried about that, you can make some plans to do something about it. But I just think it's ironic that when people are screaming, it's that back in April. Look where we are now. So again, nobody out there. Certainly, I wasn't pounding my chest saying, "Oh, don't worry, it's the low." Um, I think you have to have a long-term outlook. Period. I'll just leave it at that. And I feel that way too about when it comes to your grain marketing or your livestock marketing. If you're chasing every penny or every tick, if you're getting mad when we're at after a lousy year, let's face it, back in July, August, when corn bottomed out at 392, it looked pretty, it was going to be pretty nasty. In April, when we hit 971 beans, it looked like it was pretty nasty. And that's when all the TV reporters come out and start interviewing people. Oh, you're going to go out of business? Or what are you going to do? How bad is it? How bad is it? That generally sets the stage for the type of rally that we've had. We're going to talk about that in a minute with soybeans. Okay, these corn for the week. And I'm just going to concentrate on the weeklies because I think it's more important. Up 8.5 cents on the week. We hit a 4-month high. Also, if you've been reading my letter, you know that we came right up to the 200-day moving average. We came right up to the halfway back retracement of the entire 87.5 cent range we had in corn this year. Is it enough? No, but it is better than sitting down at 392. In the beans, jam beans now. There's a gap on the weekly charts, which is very unusual. Usually you don't get a weekly gap. There's a gap down there from 1063, believe it or not, to 1070 and a quarter. This week we opened up at 1070 and a quarter. On the week, we hit a 16-month high. This is for jam beans. And we're up 55 cents on the week. We're up a dollar since last month. So if you don't, in the last 4 weeks, jam beans has gone up from the bottom to the top $1. So if you don't reward that, if you're not happy about that, basically, I don't know what to do to help you. It's not. I know it's not $16 beans like everybody wants, but it's a heck of a lot better than where we were, and it just flies in the face. I can't tell you in the last 2 or 3 weeks how many negative articles I saw about soybeans coming out of people that generally could care less about farmers. They really could care less about farmers. So when those people get involved in something, it's not always a turning point, but 9 times out of 10 it can be. Or like that guy says, 60% of the time it works all the time. All right, moving on to the wheat. Up 20 and a half cents on the week. We hit a 6 week high. I'm going to switch to soybean meal now. We had a 9 month high. Um, we've gone up 20% in a month, right? And that's pretty interesting. You look at soy meal, we were languishing at nine-year lows. So we've gone from a 9 year low to a 9 month high here, up 20% this month. Now, is that going to last? I don't know, but it's certainly, I'll say this. There's an old axiom: the best soybean rallies are led by meal. So this is a good thing to see. Next, bean oil. Bean oil, that's the one loser. And it's the one thing that the funds are long. The funds are long. Bean oil, a little bit. They're short meal. They're short corn, about 70,000. They're short wheat, about 70,000. And the one thing that they get long is lower, and it's hit a 4 month low. Bean oil was down, on the week, and that's something interesting to watch. There's that crush, the soybean oil crush, that's really moving right now. So take a look at that. What else are we going to talk about? Let's switch over to cattle now. We get corn, wheat, and beans. Cattle on the week, pretty interesting. Fat cattle, which is these cattle, live cattle. Um, they call it fat cattle because it's right before it gets slaughtered. Feeder cattle is the beginning of the supply chain, and that's the one that's been most sensitive to the fact that the border's been closed and we've had tariffs on the border's been closed in Mexico because of screw worm, and you've had tariffs on everything coming out of Brazil, which traditionally, send us a lot of beef. In any event, fat cattle on the week down 4.3 cents. However, from the high to the low, we had a 14.55 cent correction. If you take that correction, it's about a 6% correction. So not great, not terrible, pretty disappointing to come down to 3 month lows, but that's kind of where we're at. And the feeder cattle hit a 3 month low this year. And we've had more damage done there. We've dropped almost 60 cents, 59.6 cents. The contract high for feeders there was 380.2. The low this week, 320.6. We did bounce, but that was 59.6, 16% correction. That's a lot of dough that was taken off the feeder cattle, and rightly so, because it's the most sensitive to what's going on with tariffs and borders and everything else. If you were hedged, we did roll down some hedges. We did take some profits on hedges. If you don't know what I'm talking about, sign up for my letter, give me a call, come to one of my seminars. We talk about how hedges work when your cash market collapses. If you have a hedge on in the paper market with a put or a future, that compensates you. It's like a seesaw. Cash market goes down, your value of the put goes up. Okay, and then finish it up with the hogs. A 4 month low there as well. Very, very technical. I'll cover that again. I've been harping on that here for the past 2 or 3 weeks. Lean hogs have been sitting at a 38% retracement of the big rally we had. Again, we had an April tariff low. Then we had a contract high up around 955. We went from 838. We had about a $25 rally, $25 rally from the April lows, the first tariff lows. We've been sitting here at this 38, 40% retracement for a while. We'll see if that holds. On the week, lean hogs were down just only 0.6 cents. So that's a positive thing there if you're looking for hogs to turn around. Again, for my clients that work with me, we did roll down all of our puts where we were able to do it. Why? Because we want to take money off just in case the cash market rallies. You don't want to have an expensive put go worthless. You want a cheap put to go worthless. So far the correction in the hogs has been about 12%. If you take the contract high to the low, we did make a 4 month low this week. No two ways about it. So you've got lowers, 4-month lows in both lean hogs and bean oil. Make that what you want. I'm going to finish up real quick. I let off. We talked about the S&P and the incredible rally from the bottom to the top, from the April bottom to the all-time high here at 69.53. And yes, I am going off the futures. I'm not going off the cash. If you don't need to text me or email me and let me know that I'm looking at the futures market, the weekly nearest futures market. So that's what I'm looking at. If you're asking me where I'm getting my numbers from. And then finally, gold. Just because I've got some clients that like to ask me about gold, some of them have gold, et cetera, et cetera. I don't generally make a big um, inroads into worrying about gold, but I did do the math for you. Since the all-time high at 43.98, we broke down to 39.01 on the correction. That was an 11.3% correction. On the week, gold was down $141, a 3% correction. So there you go. Somewhere out there, some poor soul went to Costco or some other store or went to the jewelry store and bought gold there at the high. Some poor soul out there took $1,000 or $500 or $200 and bought gold, and now he's sitting there this weekend trying to explain to his wife how it's okay that you're down 11%. It's going to go higher. That's my only risk with that. When gold gets in the headlines, you have people who generally don't have anything to do with it get into it. And again, it's like when you sit down at the table in Vegas. If you look around the table and you're wondering who probably shouldn't be there, it's probably you. If you're just showing up at the all-time highs to get involved in something, that's my only question there. If you look at silver, I believe silver, and I'm not going to do the numbers right now, but I know we had a 15% correction off the high in silver. So again, you don't want to be that person that's getting long at the high and then holding it. We saw that happen, and I'll put it again probably in this week in the weekly wrap. I'll throw in the long-term chart for silver and gold so you can see what happened the last time we made all-time highs. Back in 2011, gold made its all-time high, and then completely, with 3 years later, we were lower. Same thing with silver. Silver got up near 40 bucks. It didn't bottom out to, it was around sub $11 in 2020 at the bottom of the COVID thing. So if you've got a long-term outlook, that's great. In the meantime, anytime you're getting in at the highs, you need to make sure that you've got some sort of exit plan so you don't get completely run over. And on that note, I'm going to wrap it up. Have a good week. We'll be back at it. Look for the weekly wrap. I'm also going to do a private client webinar. I'm going to talk about what I'm looking at, especially in cattle, now that we've had our first big correction. Have a great rest of the weekend. Take care.